And what Hawaii Public Adjusters is based in Maui, so they're a local company. They've been in Maui for about 25 years. They're not going anywhere. And they also work for the insureds, that's you, okay? So they don't work for insurance companies, they don't contract with insurance companies. What they do is they assist you for a fee, and you can find out what that is, but they assist the policyholder to process claims. They're not attorneys, and they cannot represent you as an attorney, but they can represent you if you need that kind of assistance through the claims process. So we're not here to sell you that. I have no skin in that game, but they're here to help you and provide free information today. And that's why they're here. And Robert himself has over 35 years in the industry, 25 as an adjuster and 10 or so as a construction, in the construction field. And so I just wanted to tell you real briefly before we start, there's other places that you folks can get free information. There's the Legal Aid Society of Hawaii. There's a website that they have. You can go online. You can also call their hotline, which is operated by the American Bar Association with LASH and the Young Lawyers Division of Hawaii. And I'm going to give you that number in case you want it. It's 1-800-499-4302. And you could call that number for free assistance. And you can also go down to our very own Hilo Self-Help Center, which is at the Hilo Judiciary Building, and that's on Kilauea Avenue in Hilo. And that's every Tuesday and Friday from 11:15 to 12:45, and that's staffed by local attorneys like myself. There's some other wonderful attorneys in the room that come out for free to assist. And I can let you know that attorneys have been, are being trained and have been trained in these issues by our Bar Association, which is co-sponsoring this event, and we're very grateful to them. And so these attorneys have been trained, and they're being trained to answer your questions, and it's free, okay? Finally, I think this has been live streamed or is still being live streamed. Okay, so the morning session was live streamed, so if you have friends or family or you want to rewatch anything, all these issues were discussed previously this morning. You can go watch that on the United Policyholders Facebook page, okay? And we just ask, finally, that you silence your cell phones. If you have questions about the insurance bit, wait until Robert and Sandy are PAL, and we will then pass around the mic for questions. There's a bathroom in the back. There's refreshments. And without further ado, I'm going to introduce Mr. John Chavez. Thank you.
Thank you. Thank you very much, Jill. Good morning, everyone. Yeah, they usually go boo and hiss when it's the federal government. Come on, no, don't make me feel bad. Hi, I'm a disaster gypsy. I go from disaster to disaster throughout the United States and territories, working to get the communities to unite together and make what we call a long-term recovery group. We're doing that here on this island, and it's going to be established as the Hawaiian Disaster Assistance Recovery Team, HIDART. So you're going to hear about that. That's going to be set up to help individuals. It's put together with nonprofit agencies, interfaith agencies, and what we call the National Voluntary Organizations Active in Disaster. All these partners work together. The county has its own recovery group, but that's going to be for the infrastructure. We just care about ourselves, and that's what we're here to do. And I'm here to remind you, please, 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 please register for FEMA, whether you are insured or not. There's a lot of people that say, I'm insured, I don't need to file. But what happens if your insurance claim goes, register with FEMA by August 13, make sure you're registered. If your insurance company takes care of you, God bless you, I'm happy for you. If they don't, you can go back to FEMA and we can review your case and see if indeed you would be eligible for either real property, which is your home, not the ground, or personal property, okay? So please register. Another caveat I want to bring out is if someone is not a citizen, but their child was born in the United States, they may register, all right? You're not going to get a lot of money. You're going to get $34,000 maximum if your house was totally destroyed and you were not insured. And if indeed FEMA gave you rental assistance for a month or two, that rental assistance money comes out of that $34,000. So remember that, maximum $34,000. But you must register, please register. Say, I will register. I No? Yeah, there you go. Yeah, there you go. I already have. That's what I want to hear. But listen, when all else fails and you've gone through all the whole situation, what we do is we use what we call sequence of delivery. You go ahead at the very beginning when the guns and hoses are out. You've got the American Red Cross, Salvation Army, and all these agencies helping you. And when it's all done at the end, it's the agencies. But you have to help yourself. First of all, do I have resources to help myself? Do I have insurance? Do I have a rich uncle? What can I do to help myself? Then you have government agencies, and it's not just FEMA. We've got loans that come from the Small Business Administration. That's a disaster loan. It's not a small business loan, and you'll hear about that. Then we also have the Department of Agriculture. We have the Veterans Administration. The Internal Revenue Service. How did that happen? The Internal Revenue Service, that was not planned. And then I am really sorry, man. Oh, God. I hope that wasn't on camera. And then we also have some other governmental agencies that can help you, but please look into them. We have a disaster recovery center that's set up over here at Pahoa. There you go. Yeah, there you go. High school. They're open today. They're not open on Sundays. If you haven't been there, stop by. If you have been there, go back and have them review your case and see how things are going. So you have to make sure you have all these federal resources here. Utilize us while you can, because we had disasters a few years ago where the government was not involved. It was just locals, really hard. But now that they're here, utilize their services and what they can do for you. So please register and please follow up on it. If you get a denial letter from FEMA, don't crumple it up and throw it away in anger. Read it, because it says you were denied for a certain reason. And if you can send us this or send us that, it may help you. And most importantly, you can always appeal. Appeal, appeal, appeal. I don't agree with you, FEMA. Call them up, talk to them. 800-621-3362 is the phone number, but you know it because you've already registered. And then we've got the Disaster Recovery Center over here. So I'm going to call up Mr. McDonald, and he's going to give you a brief on SBA, and then you can ask us some questions disaster related.
Hello, everybody, and I am going to be really brief because I think we almost used up our whole 5 minutes already. But I will do this really quickly. The Disaster Recovery Center, that's your one-stop shop. If you're impacted by this disaster, FEMA's there. If you've already registered with them, you're already into the process. They may have already taken you over to our people, and some of you may have that have had their home destroyed, which maybe some of you have. Not everybody here has probably had their home destroyed. I know at least one person is in the voluntary evacuation center, and they're hoping that their home isn't going to be destroyed. So I want you guys to use the recovery center. There is a chance, because school's starting, it may be moving real soon. Keep an eye on the newspaper, the radio. It'll be relocated somewhere close by, I'm sure. And you can go there, and we'll be here for quite some time. The deadline mentioned right now, because of the declaration being on June 14th, on any presidential disaster declaration, the first deadline is automatically made 60 days out. This disaster is kind of ongoing, as we all know. And so if you may hear that the deadline is extended, so keep your eyes and ears peeled for that. But in the meantime, if you have losses and you filed your insurance claim and you're still waiting to figure out what you're going to do, but you have a loss, then apply with SBA right away. It's a separate application from FEMA. If you have any questions about any programs that we offer, the one big question I want to see if anybody knows the answer to is, who does SBA give low interest loans to in a federal disaster? Everybody. Homeowners, renters, of course businesses of all sizes. We're the Small Business Administration, and we give loans to private and nonprofit organizations. Homeowners and renters get 90% of the money from SBA in a disaster. I work for the Office of Disaster Assistance. I don't work for the regular SBA you've all heard of that helps businesses start up and grow. I work for the Office of Disaster Assistance. We give direct federal loans for most homeowners and renters, 1.938% interest rate, fixed rate, no cost to apply. You don't need to know how much you want. You don't need to take any money. Same thing for businesses, except most businesses get 3.61%. Private nonprofits, 2.5%. If you have any questions.
How much was the home? How much did you get for the interest?
For most homeowners and renters, 1.938 fixed. If you're very wealthy and you really don't need the federal help because you got lots of money and lots of income and no debt, you may get a rate of 3.875 at the highest. That's the only other rate. But most homeowners and renters get 1.938%. Okay, so the last thing, 800-659-2955, sba.gov/disaster. You can apply right online. You don't have to go to the center, but please utilize the face-to-face people that will walk you through the process. And I don't know if we have time for a couple quick general questions or not, but okay. Either FEMA, myself, can take any quick questions you have. If there are individual specific questions, please utilize about certain circumstances that you don't want to talk about publicly. Use the Recovery Center for both FEMA and ourselves, but if you have general questions, yes, sir. Well, we have statutory limits, I'm sorry. We have statutory limits that are set by Congress, the Stafford Act, that says that we can loan up to $200,000 to repair or replace a primary residence. We can loan up to $40,000 to homeowners or renters for personal property. We can loan a business up to $2 million for any combination of physical damage losses, and for small businesses, they can also get economic injury funds to get through the disaster recovery period. Some of the people in this room may own an Airbnb and they may be losing revenue because of the tourism impact. You may apply as a business owner in the business of renting out your property, either short-term, long-term, whatever, and you could potentially get repairs if you had damage, or you may just get economic injury disaster loans. Okay? And so go apply with us and talk to our people, and they'll walk you through everything. Or first go online and you can read about economic injury disaster loans.
Claim with the insurance that they're taking a while to do that.
We can get you money approved and get you money before the insurance, and if you later fully recover from the insurance, then it can go to pay down your loan, and it may be before you've even had to make a payment. There's a deferral period for you to make a payment. So it's generally 5 months. I don't know for sure on every disaster it's evaluated, because some disasters, especially this one, is going on still for a long time, and so it's hard to determine when the incident is going to stop. The incident started May 3rd, for those of you that got woken up in the middle of the night or whenever it blew up as far as earthquake goes, and it's still ongoing and it's still open. So there's a chance that the county and the state will work together and ask FEMA for an extension of the deadline and the application period. Ours go hand in hand, FEMA and SBA.
Now, if the insurance company sees you took a loan from FEMA, will that affect how they're going to treat you?
You're going to get a whole primer on insurance here for the next 2 hours, and they'll answer that question.
I filled out the application.
Okay.
On the application, there was a whole bunch of information that I needed to fill in. Okay.
For a business?
For business, yes.
Yeah, like a personal financial statement and some other things?
No, my question is that to see if we qualify, or is it to see what kind of collateral we have? And the second one is, how long is the loan term?
A loan can be up to 30 years. It's generally, a lot of times, either 15 or 30, up to 30 years if you want it to be. Most businesses don't want to pay a 30-year loan. The collateral will be asked for, any collateral will be asked for if you borrow more than $25,000 from us. We look at your financials to qualify you to we may need to take collateral if you borrow more than 25,000. So we look at your ability mostly, not your credit score and we look at your ability to take on more debt than you already have. And look at what your need is. If you have economic injury need and you got to pay your mortgage and make your payments, and you don't want to spend your retirement money or your credit card money, you're eligible to apply for economic injury. I will say, because they really got to get moving on a lot of, you guys are going to be a little hot and tired after the whole presentation. We are, FEMA and myself are at the Pahoa community meeting every Tuesday night so far, and I'm in the back of the room answering these kind of questions. But really, if you have any questions, go online, call our customer service number, or go to the Disaster Recovery Center. Thank you very much. Thank you so much.
Good afternoon, everyone. My name is Sandy Watts. I'm with United Policyholders. We are a nonprofit. Sorry, you've got to bear with us a little bit here. I'm a 25-plus year claims adjuster. So I adjusted claims for a living for many years for a major insurance company. Since then, I've become I'm an insurance consultant and expert witness, and I do work for United Policyholders doing things like this, bringing education and advocacy to policyholders. We're a nonprofit. We don't take money from insurance companies. We're all grants and loans, and I'm backing up. I want to thank, because I'm looking at Jill. We're here because Jill, people like Jill and Charlene, where's Charlene Abashi from the Hawaii State Bar Association, they've all worked really hard, and the people from Hawaii Public Adjusters, they all worked really hard to get us here to bring our experience to you. We work with a lot of disaster survivors. United Policyholders has been around since the Oakland Hills firestorm, and we go from disaster to disaster, helping people get through their insurance claims. So we're happy to be here. I'm sorry that we are, but I'm not a lawyer. I'm a claims adjuster. This is not legal advice. We're just going to tell you what's in your policy. We can't do individual claims for people. We can only give you overviews. So we just want to give you that. Okay, so today we're going to be two separate sessions. I'm going to do things about collecting money, okay, under your policy. Robert's going to talk about challenges in coverage. He's going to talk about, you know, if you're getting denial letters, if you're getting things like that. He's going to talk about that secondarily. I'm going to talk about how to get the most that you can from your insurance policy. So I'm going to sort of assume some coverage in my part of the thing. So these are the things I'm going to talk about. Valuation disputes, if you get a lowball dwelling estimate. These partial payments we're seeing. Additional coverages, and then the actual cash value versus replacement cost, and underinsurance, okay? So I'm going to start with valuation. This is kind of a big issue for people. One of the things that kind of surprises people when they have a claim is that it's your responsibility to tell the insurance company how much they owe you. And that's kind of shocking to most people. People figure, I bought a policy, it says I have X amount of money, why don't they just give me that money? You know, but that's not how the policies work. Policies are contracts, and so all that stack of stuff they gave you is what people rely on to determine how you're going to get paid and for what. So one of the biggest hurdles is how much does the insurance company owe you for your dwelling, for your home, or your rental property or whatever. So what they owe you in general is the cost to replace your home as it was the day of the loss, okay? So the cost that it takes to rebuild it exactly as it was prior to it happening is what they owe you in general, up to your policy limits, okay? Another issue that people are talking about a lot here, because a lot of these places that were lost were very beautiful, they had views and things like that. The insurance company doesn't insure land. So they don't insure for the fact that you had a property with a beautiful view or on the bay or waterfront or whatever. They only actually owe for the thing that was sitting on the property. So no coverage for land. You can't buy coverage for land. And it's up to you to document your loss in order to get paid what you owe. Okay, so there's a lot of different ways. Have any of you started trying to document your loss yourselves? Okay, good. There's a lot of ways to do it. In this particular instance, they're being a little bit more creative. In normal cases, if you have a house fire, say you just are one person with a house fire, an adjuster will come out and they'll look at your house, even though it's burned. And some people, it's hard for them to understand, but even if your house is burned, an adjuster can go in and do a fairly decent job of digging through the rubble, figuring out what you lost, writing an estimate, and then you go and get an estimate to compare it. In this case, that can't happen because they're gone. Nobody can even look at the ashes. Contractors' estimates are a very traditional way that people have valued their lost property. Also a challenge here. In real life, if you have a house that burns down, you can get a couple of contractors, go through what it is you lost, ask them to give you a bid, and you submit the bid to the insurance companies, and there you go. A lot of them will do it for free because they're bidding for your business. They want to rebuild your house. They want a chance to rebuild your house. And again, that can't happen here. So there's a lot of, it's still a way to do it. Some people will sit down with the contractor. Some people have plans for their house before it burns, so they can sit down with the contractor, go through what it is that they lost, and come up with a fairly reasonable bid, but it's going to be kind of hard. There's professionals that you can hire to write scopes. There's people who do that for a living, and they sit down with you and they go through what's your square footage, what kind of finishes did you have in your house, and so forth. And you can also hire public adjusters, and they are good at doing that and coming up with your estimate. A lot of people that I've been talking to for this disaster have been given real estate appraisals from their adjuster. I'll try to stay out of the way. From their adjuster as a basis for determining the fair market value of their house. That's not what they owe you, and there's a lot of situations where the appraised value of your house and the cost to rebuild, they're wildly different, okay? They're not the same thing. The adjusters are operating from the point of view, okay, I'm gonna owe you some money. This is sort of the easiest way to get you the first payment. So that's the way you guys should look at these. If you've gotten partial payments from an appraised value, you should look at that as, okay, this is just a first payment. It's not, whoops, back a little bit, sorry. Yeah, it doesn't, okay, sorry. I'm looking at it back and forth. Go ahead. Okay, so what seems to be happening here the most is that the adjusters are asking people to send in what they have. Have you guys sent things in to document your loss? And what have they been asking you for? Photos? Lists of finishes?
No, photos and
Mm-hmm.
spreadsheet of content.
Yeah, so we're just talking about the building right now. So without the, so photos are good. It seems to me, from my point of view, that they're accepting sort of less than they usually do in disasters like this. But you should make sure that when they make a payment to you for your house based upon that, that the information that they have to base the payment is for what you had. And so that it matches. And there's a vast difference between certain types of construction. There's a difference between if you have carpeting on your floor or hardwood on your floor. So you need to make sure that those adjusters are sort of giving you an interview that gets some substantial information into their system so that they can at least try to give a decent thing. And one of the reasons that this is happening at this disaster is because there's a lot of underinsurance issues. And so when you have a property that's underinsured, it doesn't matter as much how precise the estimate is, because they're basically looking to see, we're going to go to this point and then we're going to cut it off. So if you are in a situation where you have adequate insurance, so if you have good limits that are close to the value of your house, you need to be meticulous. You need to go and make sure you know how many outlets were in every room, what type of everything, size of your baseboard, ask them to show you the basis for their payment. If they're saying this is what we owe you, they should be able to show you how they got to that amount and why. If you're in a situation where you have, I just had one more on that, where you have adequate limits and you want to go through, make sure that you work with them. It's called a scope of loss, and that's the thing where it lines out everything that was in your house, and it's super tedious. It's really hard to do, but it's the best way to get your loss paid properly. Let's see how we are. Okay. Yeah, the law requires them to provide you with the basis for your payment. So if they just send you out a payment, and I've talked, and we'll get to the 66%, but I've talked to a lot of people who they just are sending them 66% of the dwelling coverage, and that's what they're sending out, and they're doing it across the board. They have to show you why, and they can't just send it to everybody 66%. They have to have a basis for making those payments. So ask them, and they're required to give it to you. Object in writing, and just let them know, thank you, you sent this to me. This is not what I'm owed, and so we're going to keep going from here. And then submit your own documentation to support what it is that you think they owe. Okay. Oh, did we go through the 66%? I'm sorry. It's a long day already. If you have the 66% payment, the same exact thing applies. Just tell them that they can't do that. Does anybody get that straight out, the 66? No, okay. Okay, now we can click through. Okay, so these are other things in your policy. These are called additional or other coverages. And so it seems to be the people I'm talking to are about half and half, whether or not they know these exist, whether or not your adjuster has explained them to you or not. So if we go, they're different for every policy, and that's also something I should talk about. Everybody's policy is different, and even if you say, I'm a Lloyd's customer, they have different underwriters, and those underwriters issue different policies, and those policies have different language. So if your neighbor got paid, X amount for something, and they're a Lloyd's, this applies mainly to Lloyd's, but if they have a different policy than you, you can go to your policy and you might not have it, you might have more, you might have less. It's very individual, so you have to look at your coverage. And these especially, because these vary by policy. But they also represent a lot of money that a lot of people are sort of leaving on the table by not knowing about them. And there are extra coverages that add a percentage over your coverage limit. And these are some of the examples of what they have. If we go to the next slide. Okay, so I want to show you an example. This, I know it's kind of hard to read, but this is a declaration sheet, okay? The declaration sheet sort of gives you the overview of the policy. This particular one, right here, that's the dwelling coverage, coverage A, and it has $279,000. It has no coverage for other structures, has some $20,000 for personal property, and it has no other coverage, no loss of rental, no additional living expense, no nothing, okay? So, his person, the adjuster for this claim, said, I'll pay you for your house, I'll pay you for your contents, $20,000, and you can go away. Except, if you actually go and read the policy, this is one of the first things that comes up. So this is after your other coverages. So when you look in your policy, it'll describe coverage A, coverage B, coverage C. This is other coverages. And in this policy, he's got other structure coverage up to 10% of the coverage A limit of liability, okay? An additional amount of insurance. That means for this guy, he's got 5% of $279,000 in additional coverage that he's owed for the loss of his other structure. This guy had, a garage. Other structures are garages, carports, fences, patios, anything that's separated from the main house by clear space, okay? And if you look down here, he's also got, this, rental value and additional living expense. 20% of coverage A limit. Well, he has coverage A. So here he gets another 20% under coverage A for his loss. This was a rental, so his lost rental. Additional amount of insurance. So that's another, you know, $27,000, almost $28,000 that this guy wouldn't have had. Okay? Here's trees, shrubs, and plants. Most of these are $5,000. I'm hearing from a lot of people who, yeah, it's 5%. Sorry. I'm hearing from a lot of people who say that their adjuster's telling them that they can't get the trees, shrubs, and other plants until they replace their property. And to that, and to almost every question where they tell you you can't have anything, your answer is, show me in the policy where it says that. Okay? So if you read this, it just talks about we cover trees, shrubs, and plants on the location for loss caused by the following. Okay, we've got some fire here. Limits 5%, $500 limit for one tree, shrub, or plant, other insurance. It doesn't say you have to go and get some new plants. It doesn't say that. So they owe this right up front for what you lost. Now that's different on debris removal. Debris removal, a lot of these policies say we pay the reasonable expenses you incur in the removal of debris of covered property. So that means you have to spend it. It doesn't mean you have to necessarily spend it at the property, because as everybody knows, you can't rebuild on your lots, right? So if you're gonna go and rebuild somewhere else on the island and you buy a lot and it's covered in vegetation, you're gonna have to clear the vegetation to get a pad for your house. That is the time that you incur your debris removal. And you would have been owed it at the old house, so you're owed it at the new house, and like this one is 5%. Okay? So, and some of them are a little different. This one says you incur it, this one says your reasonable expense. That's a little lighter. You might be able to get that up front. It always helps to ask if you can have it up front. And sometimes they'll give it to you. Even if it says this, they might give it to you. Okay. This is a tricky one. So anybody know about your ordinance or law coverage? Have you guys heard about this, your code upgrade coverage? So this is not necessarily included in every policy. Some policies have it, some policies don't. Some policies specifically exclude it and then add it back with an endorsement. But you need to look in your policy and see if you have it. And it says ordinance or law. And what it is, it's code upgrade coverage. So imagine if your house was built like in 1965, okay? And it was built to the specifications of 1965. If you were to go back, if you could, and rebuild that house today, all sorts of codes have been passed between 1965 and now, and you couldn't build it the way it was. You would have to, I think they talked about solar panels for hot water heaters. In California, we require sprinklers. There's some roofing codes. I know there's some single wall construction here that's burned that they won't let you put that back anymore. So anything that's an additional amount to rebuild your house that's required because of code is potentially covered under this coverage, okay? And the percentages that are available, this one is, I have to see what, this one's 10% right here. But they vary widely. They go from 0 to 50, I've seen 100%. So some of them, sometimes you have an endorsement that gives you 100% more coverage. So you need to look at that. So all this is right here is an example of how you can get these add-on coverages. And here's your dwelling. So if you get your loss of use, you get your other structures, you get some ordinance. So this is a lot higher than what he was originally told. So you need to read your policy and find those out. Okay? And then, okay. Back? Yeah. We're going to have these, we're going to put them on our website too. So, okay, go ahead. Okay. So, the loss settlement provisions tell you how they pay the money. So have you guys all heard about actual cash value and replacement value? You guys know what it is? So actual cash, a replacement value is the cost to replace your home as it was the day of the loss. Actual cash value is that amount minus any depreciation, okay? And depreciation is, you know, items that wear out over time. Carpeting, paint, roof, those type of things. And they they depreciate based on age and condition of the property. So if you've got something that's old but it seems new, then you can always negotiate depreciation. It can always be negotiated. And if you feel like they've taken too much, you go back and you argue with them about the condition of that specific thing. I'm sorry, can you back up? Because I'm tired, so my train of thought is going. Most of the policies say they pay actual cash value up to the policy limits until the property is repaired or replaced, okay? So that means they'll pay you the depreciated value up to that policy limit until you go and replace it. Now, in the best world, you should be able to get an estimate where your actual cash value hits your policy limit, then you don't worry about anything. Then it's over, right? If you've got plenty of limits, then you need to work on what they determine as actual cash value so that you get enough money to get started on either building a new house or buying a new house and go from there. Okay, next slide. Okay, so these are the loss settlement provisions. This is the loss settlement provision from Lloyd's. And it's talking about, this is personal property, and these are the buildings. And this is basically what it's saying. So, any of you seen on your policies where it says 80% coinsurance? Have you guys seen that? Yeah, so this is the coinsurance issue going on here. So basically, coinsurance was a mechanism historically for insurers to make sure that you insured the property to value. They wanted to make sure that things were insured to value, that they were collecting the right premium, you know, so on and so forth. So, wait, go back. So what they say here is if at the time of the loss, your damaged building is 80% or more of the full replacement cost, your insurance is 80% more of the full replacement cost of the building, then they'll pay you the least of the limit of liability, which is your policy limit, or the replacement cost of that part of the building damaged with like, kind, and quality, or the amount you actually spend. That's if you go and spend it before they pay you, which doesn't happen very often. Now, if your property is not insured 80% to value, so say for instance, you have a $100,000 coverage limit for your building, and say you get an estimate, it's $200,000 to rebuild your building, okay? So you're only insured 50% to value. Then the second provision kicks in and it says if you're insured for less than 80%, we'll either pay the actual cash value of the building or the proportional amount that you're underinsured. So that would be 50%. Luckily, these policies that I've been looking at, they say the greater of. So in most cases, you'll just get the ACV up to the policy limit. Some policies historically have said, well, they just pay the proportion amount. Commercial policies do that a lot, and so they knock your claim in half and say you're penalized, you didn't insure your property to value. Then the last bit is we'll pay no more than the actual cash value of the damage unless your actual repair or replacement is complete. Okay, so that's kind of a key issue. They owe you your actual cash value until you go to replace the building. Okay, sorry, it's a lot of info, I know. Okay, and then we went through this. This is it. Yes, I had slides for that. Okay. So this is what I was just talking about. A lot of times they'll say, we're going to pay you this, but we're going to hold your replacement cost benefits, and when you replace your property, you can get those replacement cost benefits. Have you heard that?
Well, yeah, but it doesn't make sense to me. How? So I don't have to worry about that. Right?
Well, yeah. So. Yeah, well, so what it means is that the loss settlement provisions say that they owe you the actual cash value, the depreciated value of what you lost, up to the policy limit until the property is repaired or replaced. So that's why it's important to have a really good actual cash value number if you don't have a policy limits problem. If you have a policy limits issue where your actual cash value is higher than your policy limits, then none of this applies, okay? Keep going. Okay, and then these are just tips for negotiating your actual cash value payment. You want to insist that they provide you with the estimate. Now, I'm hearing from some people that their adjusters aren't doing estimates, which is interesting. And if they don't do an estimate, then your payment needs to be based on what you submit to them. They can't just, you know, unless they're going to pay you your full policy benefit. If they're going to pay you your full policy benefit, then that's fine. They don't need to do an estimate. But if they're going to pay you something less than your full policy benefit, they need to give you an estimate, or else they need to pay off of your estimate that you submit. Does that make sense? And then when you're talking, if they do give you an estimate and they've got a lot of depreciation, look at things that should only be applied to, yeah. We're good. Yeah, your same cover, your full coverage limit. So make sure that there's depreciation only applied to materials, not to labor. And then this is in submitting your documentation. The other thing you can do, we're doing a lot of work on the the California wildfires up north, and people are asking that they waive the replacement, and some of them are doing it. You send in writing and say, look, this is everything I had. This is a disaster situation. I really need this money to relocate my family. Will you please waive the replacement cost provision and pay me up front? Try it, and it works sometimes. They don't necessarily have to do it, but it does work sometimes. Okay, so and there's a lot of underinsurance issues here with this disaster specifically. Almost everybody I've been talking to has said that they are going to receive less than their home would cost to rebuild. And so this is a really interesting issue. This is an issue that United Policyholders is really spending a lot of time on because the law basically is in favor of the insurance companies. The law says that you as the homeowner are responsible for choosing your coverage limits when you insure your house at the time the policy is sold. However, every single person here probably went to their insurance agent and said, I need to insure my house, and they gave you something that showed you how much. We were, talking to one of the attorneys, and they got the square footage of the house, and the agent just presented her with the amount that the house would be insured for, and that was the end of that. And that's not the end of that. So it really is right now up to you to determine your coverage limits, but we all know that that's not happening, and the agents are doing a lot of this. So if you have reason to believe that you're owed higher than your coverage, than your limit of liability because of something for your agent, it's really tough, and you probably need a lawyer, but it's not impossible to get the company to pay over your limits, okay? And in these cases, if the insurance company, for instance, say you sat down and you say, okay, I need insurance, and the agent presents you with $350,000, and you say, well, I don't think that's enough. I think my house would cost more to rebuild. And they said, no, it's not. It's fine. It's fine. You'll be fine. Well, in a situation like that, they give you reason to believe your limits were adequate. You might have something. It's best to have things in writing, but we know that doesn't happen that much. If they made a mistake, and we've actually seen these, where numbers on an application translate to the wrong numbers. And I talked to somebody, I don't think she's here anymore, somebody earlier today, they just made a typo on her ALE. And instead of 27,500, they made it 2,750. And so it's just a straight out error. Now she should be able to go back, request the underwriting file and do some things, but it's really hard and it's not easy. But if there's a mistake and you feel like there's a mistake, then you should ask for the insurance underwriting file. You're entitled to get some of it, and see make sure that everything you applied for was everything you ended up getting, okay? And then finally, it's if they voluntarily undertake the duty to set your limits. Some people, like, I saw somebody who, it was super clear because they had a couple pages of valuation that the agent had computed, and they attached it to their application, and it clearly showed that the agent computed the coverage limits. Then they might have a case against them and saying, look, you assumed this responsibility by choosing my coverage limits for me, so you can maybe go back. Now, what they do if this happens is they don't actually just say, okay, your house was underinsured by 20%, we're just gonna raise your coverage limit and pay you the difference. What they do is if they decide that there's a legitimate reason for changing your limits, they'll go back, and they'll go back to the policy inception date and cancel the policy and then reissue it for the right amount and charge you the difference in the premiums and stuff. So it's a tough issue, but it can be done. The other thing is find out if other people have the same issue. There's a couple, there's some people I've been talking to who only after the disaster found out that they didn't have any coverage for loss of use or personal property. They thought it was there, used to be there, and then it's gone. There's things like that, and they all seem to be with one agency. So if it's a pattern, yeah, we're gonna do questions at the end, but if it's quick.
It's quick.
Oh.
It's quick.
Uh-huh.
So the what you were just talking about, with them undertake the duty to set the limit. What would they have needed to do for it to be proper? Would someone have to come out and do an appraisal, or?
Well, if they just undertake, if they take on, they say, I'll take over the duty of selecting the coverage limit for your house, no matter how they do it, that might put them in responsibility. See what I'm saying? Otherwise, you have to transmit to them how much you want in insurance. Yeah, okay. Okay, so the last things that we're gonna do here is, one of the things is that, and I know it seems to be hard in this disaster. It seems like a lot of people are not getting letters. Force them to write you letters. They have to. The insurance code says that if you write them a letter, they have to respond in 15 days. Yeah, yes. So,
Is that the same with email?
yeah, yeah, and it's in the insurance code, and I'll have the insurance code at the end here. But yeah, they're required. They're required to respond to you substantively. So they can't just say, yeah, I got it, and I'll get back to you. They have to actually address your issues to the best of their, if you ask them, say, a coverage question, they can't really write back and say, yeah, I'll get back to you, because there's no real investigation on answering a question. They could be like, well, we don't know if this applies to your claim because we need to investigate what's happened in your case. But in general, the earth movement exclusion says this. They should be able to reply something substantial. So, wait, go back. Sorry. Yeah. So make sure that you confirm that you're cooperating with them. Insist on a written explanation. Put it in writing what you need from them. And one of the things that I think people should insist upon, you need to insist that they explain this stuff to you. They should be explaining it. They have a duty to tell you about your coverages and your benefits and what you can collect under the policy. And so somebody should be talking to you about this. And so if they're not, write to them and ask them for a breakdown. I would like to know all the coverages available to me and how I collect them. Can we do it at the end? Or is it?
Yeah, it's related to this right here.
Okay.
In the basis of asking, is the adjuster required when you request to give a breakdown on that, or is the insurance company required to send you that information of what the adjuster sent them?
Yeah, we'll get to that. They need to give you an explanation of the basis for payment. And it doesn't matter who it comes from, but they need to give you the explanation for basis of payment. Don't let them hide behind the fact that they're an independent adjuster and they don't work for the company. I mean, they do work for the company. The company hired them to adjust the claim. So a lot of them are saying, well, I've turned it into the company and they'll make their decision. Well, you need to if they make a payment, they need to show you the basis for that payment. So, yeah. If they miss anything, I'm still back on the page. If they miss anything, point it out and have them and point it out, and then remind them of your situation, and then give them a time to reply. Tell them I expect a response in 14 days, and then at the end follow up with them. Okay, thank you. And then these are just our negotiation best practices. Be professional. Unfortunately, these adjusters have big workloads, and it's not a good excuse, but they do. And so the easier you can make it for them to see what you need, the faster your claim will get settled. So if you can be really concise and to the point, put your bullet points. Sometimes people, these are really emotional situations. These are really emotional, and they're tough situations. There's people, there's home, you know, and it's hard when an adjuster gets, you know, kind of a long paragraph, and the long paragraph of everything hidden in it is something that he can cover. It's much easier to just sort of stick to the facts and put them in there. So avoid the long paragraphs, try to bullet point your requests, be professional, use good grammar, respond to their requests, and then point out if they're doing something unreasonable. And then try to avoid venting your frustrations, because it just stops the communication. Even if they're ridiculous and bad, just try to, from your end, try to keep it so that you can keep it going. Okay, if you guys go and look, you can just Google this on the internet, and there's a list. It's number 11. If you go to the Hawaii Revised Statutes, 431 is the insurance code, and if you go to number 11, it talks about their responsibilities on handling claims. It talks about when they can respond and all that. They have prompt investigation. And then know that there's statutory penalties for bad faith. Okay, so if you need to, look for professional help for different parts of your claim. Contractors can help you, appraisers can help you, scope of loss estimators can help you, public adjusters can help you, and attorneys can help you. Our website, the website, which is uphelp.org, is, I can't even express what a good website it is, if I do say so myself. But we have a lot of really good information. So if you're thinking about hiring, an attorney, a public adjuster, anybody, go to this link, and it'll have all the different people, and it'll tell you, ask them this, ask them for a license, ask them for references. Make sure that the people you're hiring and giving your money to are going to be here next week after they get some of your money. It's notorious, people giving contractors a deposit and then never seeing them again. So make sure they're people who are going to be here. Okay, and this is good stuff. And then finally, the Hawaii Department of Insurance. Anytime you're having any sort of problem, we recommend you contact the Department of Insurance. See if they can help you. Sometimes they can help you, but even if they can't, they compile statistics. They keep track of what's going on. They keep track of how many complaints a certain insurance company has, and all these things, so that they can kind of, there's legislative tie-ins to it and all of it. So work with the Department of Insurance. And then the last bit is, this is another plug for our website, uphelp.org. And we have sample letters in there if you want to go in and look at sample letters for requesting different coverages and so forth. So those are all in there. And then we'll just write down your questions if you have questions, and then after Robert is done, we'll do all the questions. And that's all I have.
That was a joke. Hi, my name is Robert Jocelyn. I'm the CPPA here in Hawaii. I am, let's see, we are Hawaii's oldest and largest public adjusting firm. Does everybody know what a public adjuster is? No. Okay, public adjusters are licensed by the insurance commissioner and governed by the state legislator. We have the authority to represent your financial interest in a loss. We have that legislative authority. So it's us, it's Sandy, or it's a lawyer. volunteers and consultants for United Policyholders. We've worked with her since, well, we've worked with Sandy lately quite a bit. She's only with Salone. But I actually was, first time was at Hurricane Ike in Galveston when I was over there on that. We are members of NAPIA, APIA, VOAD, Vocational, I lost my screen, sorry. There it is. And Lisa is herself, along with myself, certified appraisers for insurance losses. So the difference between appraisals, what you're used to, like, oh, I'm gonna get my jewelry appraised, or I'm gonna get my house appraised. Insurance appraisals, we determine the value of a loss, which is different than those others. All right, so Lisa, who's on the projector, she's a public adjuster also. Jimmy Lloyd, he's right now in Honolulu. He's a public adjuster. Dave Austin is my contracts administrator. Dave is at the back. I also have Coral Bian. She is my right, left hand, elbow, everything else. Vicky is, where's Vicky? Not here, she's somewhere. And Jamie Ulrich, these are the personal property documenters. These are the ones that do all the shopping, do all your contents. You know, it's quite a bit of that stuff that goes on in these claims, and people don't really realize we don't care what something costs in Kentucky. We care what it costs to buy it in Kentucky, ship it over here, and make it part of your contents. All right, public adjusters. We prove the extent of the damage, we prove the cause of the damage, we prove the value of the damage. We call out the improprieties of adjusters. We discredit foreign or alien adjusters, which are non-state. So we're local adjusters. We're Hawaii public adjusters. Then you have adjusters that work as independents for insurance companies, or field adjusters who work actually at a desk. Never understood why they call themselves field when they sit at a desk. But they may be in Kentucky, they may be in Texas, they may be in Washington, but they're not from here. So we make sure if they start doing adjusting work that they got a license, because the worst thing to do is somebody in Washington that starts applying Washington rules. Well, we know HRS 431 back and forth. That's the laws that adjusters have to abide by, insurance companies have to abide by. Lloyd's has to abide by our laws and our HELO juries, by God, right? Now, they're not admitted. They don't have to listen to the insurance commissioner, but he's got to follow the statutes. So for them to sell that policy over here, they had to have a local producer. Producers are what you used to call agents. Agents that got to be confusing back in the 19s or whatever, because the agents, you thought that was your agent. That nice person is your agent. They're nice people, but they're the carrier's agent. So the name got redefined as a producer. Everybody's a producer now because they're producing policies as an agent from a carrier. That's how that works. I mean, you may call them your agent, but the truth is they're your producer. All right, and then let's see. So we've got enough of these claims in that we are handling. So I think we have one or two in the house here that we represent. And we have to get into common language of things. We're trying to figure out, well, are you a donut? Or is your loss an Alamo? Or you're a total loss? And we only have that simply because some people don't understand the differences. And that'll get more important later on. Donuts are structures that are surrounded 100% by lava, but the structure's still there. So it says, my property's surrounded by lava, my grass is green, but my house is burnt down. And we need to know that too. Alamos are structures that are surrounded or being and will imminently fall to the lava. We know it's going to happen. Okay. A lava flow in and of itself is not earth movement. We had an adjuster saying, well, that's obviously the earth moving, that's not covered. I said, no. No, because when you look at your policy, it will say earth movement meaning. The word meaning is there. And anytime you see the word meaning in a policy, replace it with the word defined. So anytime you see meaning, just put define in. And it defines earth moving as earth trembles, shakes, and it gives all these things. Lava's not in there. So what that means is, whatever that means, that's what Earth movement means, and lava is not in there. So everything beyond that is covered. Most losses would be covered as fire perils under standard homeowners policy if heat or asphalt or embers or oncoming fortuitous event causes that loss. We get people covered. I wrote a letter 2004 stating that. I asked the insurance. They said, yeah, I think you got it right. If I got lava coming out of a house, coming toward a house, and that house catches on fire before that lava hits it, that's lost by heat, which triggered a fire. See that situation there? The house catches on fire. This house is gone. But there's certain photos we have of houses on fire without any lava touching it.
Can you shut off that top light, is that okay?
Sure.
So that we can see the picture?
This one? Right here? Is that okay? You okay?
I'm good.
Okay. Okay, so when we have some of the films, some of the different people have found some of these things on some websites. They found their own houses. We have found, like I said, houses that have burnt. They said, oh, it's caused by lava, clearly. And people are saying, I got a picture of my house on fire. Somebody took pictures of it, and it's not because lava, it's still covered. It's a fire loss, right? It's a loss by fire. Loss is covered. So you end up with houses we were looking at yesterday, and we're seeing a couple of collapses. We see a couple that are where the SO2's gotten out there, has killed off all the landscaping, right? Covered. Don't let them tell you different. We see where the classes from the asphalt has crushed it. Some of the cinder. That's a total loss. If you have a donut completely cut off from that house, you can't use it again, that's a total loss under the loss of tangible property rule. Got it? So if you're a donut right now, you got a total loss. Did not fall by any other means. Okay, so here it is. Volcanic eruption, other than losses caused by earthquake. So volcanic eruptions are item 16 covered under perils. HO1, DP1s, HO2s, DP2s. That is basic. The 2s are broad, which are named peril policies. HO3s, which we see a lot of, and DP3s, which we see a lot of, are all peril policies except this and this, right? So they say everything's covered except these certain things. So when you hear about an all perils policy, just remember, yeah, if you got an all perils policy in HO3 or a DP3, which is homeowners or dwelling policies, remember that you're covered unless it's in the exclusion. So you go to make a claim. Well, who makes the claim, by the way? They do? You do. It's your claim. It's nobody else's claim but yours. Nobody else's claim but yours. You make your claim. They have to show that an exclusion covers it, relieves them of it. They have the burden to prove that. They don't just get to say it. They have the burden to prove it. All right, so endorsements. Endorsements are amendments that can be modified, that can modify, limit, or expand coverage. These may reflect public policy of the specific locations. These can completely contradict parts of the exclusion contained in the main part of the policy. Hence, it is a critical review of all endorsements for evaluating coverage. Acronyms in this business are popular. DICE. DICE. Declarations, insuring agreement, conditions, and endorsements. DICE. That makes up an insurance policy. Your renewal, that's not a policy, that's just the bill. Okay. The first time I saw this, I had the biggest Three Stooges look on my face. I said, what in the world are they saying here? Who writes the contracts? The insurance company does, that's right. Who's responsible for the wording in insurance company? The underwriters, all that, right? The policy writers. Well, it all comes from a place called ISO, Insurance Service Offices, out of New Jersey, in the early 50s after the World War II stuff. So they started making there's all these policies, but the problem is that when you went to compare, or businesses went and got loans and things like that, these policies, they couldn't tell who was covering what. So ISO was one of these places where they all mutually started writing policies for a lot of the national firms. And that's where you get these HOs and DP3s and all those things. Those are types of policies. So you can change those types of policies by using these endorsements, okay? So when they get written, they gotta be written, I'm gonna cover this in a little bit here, of just why they gotta be really clear what you're reading. Because who does the ambiguity help? It helps you. Ambiguity helps you in Hawaii. If you don't understand this, and a layperson's got to read it 4 times, and there's 3 meanings, it's out. Okay, in consideration of the premium charged, first question I got, did you change the premium, Lloyds? Did somebody change the premium? Because if you put this in, I'm going to see where you took away the money for it, if you're saying you did that. It is agreed that the peril of lava and/or lava flow causing direct or indirect physical damage or loss of use of the property insured is deleted in its entirety from the policy. Anybody here got Lloyd's? Anybody here look at their policy and see where these words are and where you're going to delete them from? It ain't in there. It is not in there. The words lava and/or lava flow is deleted in its entirety from this policy. Not in there. They're only telling you to delete words, correct? They telling you that they're not covering it? Because that's how I read it. I read it that they wrote it wrong. Whose ambiguity gets helped here? Helps you. Got a lot of blank looks there. Is those good blank looks? That's how this works, by the way. All right, here's our great legislatures. And our great courts, by the way. This is where we live, right here, 431. In addition to any other requirements of law, no contract shall be delivered or issued for delivery in Hawaii unless the text is in plain language. Bam, there it is. Under Hawaii law, the insurer, you're the insured, the insurer has the primary duty to provide a clear and unambiguous policy. All the way up to the Ninth Circuit in 1957, this got carried all the way up. Nobody wanted to take it to the Supreme Court. Because if it's clear and unambiguous, they're writing it, great. You are the one that's supposed to be understanding it though, right? Insurers who seek to impose upon words of common speech and esoteric significance intelligible only to their craft must bear the burden of any resulting confusion. I don't know who wrote that, but it's very crystal, yeah, isn't that clear? The insurer must be held responsible for achieving certainty and clarity in the field of insurance. You go back and read that lava thing 3 different ways, folks. All of this is going to apply to that. That's just not there. So I have a client, I think he was going to be here today. I don't know if he showed up, but he has this. He says, I need your help. I said, okay. He says, but on August 13th, my agent has sent me a renewal, and the renewal has 2 pages replacing that. And then they say, you need to go get lava insurance. That's what the agent's written to him. On the letterhead, right? It's on the letterhead that way. And he says, what should I do? I said, well, if it were me, I'd write a check for exactly what my policy was that's in right now, and just say I'm renewing it. Because if he's offering to change your policy under this moratorium period, they got a problem. If they're taking away stuff, they got a problem, right? All right. In Hawaii, most insurance policies are contracts of adhesion, and that means that, again, a contract of adhesion is they write it, you accept it, or you don't get it. Right? Now, I'm not a lawyer. I'm going to tell you this. I'm not a lawyer, but I live in this stuff every day. And I hear the same thing. And I hear the same excuses. And then they write a check. In Hawaii, because insurance policies are contracts of adhesion and are premised on standard forms prepared by the insurer's attorneys, we have long subscribed to the principle that they must be construed liberally in favor of the insureds, and any ambiguities must be resolved against the insurer. A contract, and again, some of these are fairly famous cases, by the way. You'll see them cited almost in every lawsuit having to do with any lawsuit, really, with insurance. Typically, you'll see these. A contract is ambiguous when the terms of the contract are reasonably susceptible to more than one meaning. More than one meaning. You can stand there and read it two different ways, and everybody goes, yeah, I can see it that way, I can see it that way. That's it. The game's over for that. All right, so we're going to go through some of these here. Hawaii Revised Statutes, again, 431. Unfair methods of competition and unfair and deceptive acts or practices defined. The following are defined as unfair methods of competition and unfair or deceptive acts or practices in the business of insurance. Number one, misrepresentations and false advertising of insurance policies. Making, issuing, circulating, or causing to be made, issued, circulated, any estimate, illustration, circulation, statement, sales presentations, omissions, or comparisons which misrepresents the benefits, advantages, conditions, or terms of any insurance policy. If you're being told something that ain't right, actually, I love you if you got it in writing. Those are the people I really love. You got something in writing that helps us. We send out what are called milestone or tolling letters. We turn around and say, okay, you know you're not supposed to run past this stop sign. You ran past this stop sign. Here's the stop sign. It's called Hawaii statutes. You ran past this one, you ran past this one, you ran past this one. You got X amount of days to correct. We have the right to do that as public adjusters in this state. Okay, so communications are, when you start hearing these 15 days, here it is right here. With respect to claims arising under policies failing to respond with reasonable promptness, in no case more than 15 working days. When we have something that goes out, our computer system, we put 21 days. 21 days, because working days are not weekends, right? So we just automatically put 21 days in there. Biggest way that we can get it. 22nd day comes up on that, we don't have an answer back, we send another tolling letter, a damning letter. And we love writing letters to these people. We love writing letters. With respect to claims arising under this policy, failing to, okay, there's 15 days. So, and that comes from the insurer's policyholder, you, I should just say insured, but that's a long way of saying it. Any other persons, including the commissioner or any other person, that's me. I'm not any other person. Or the insurer of a person involved in an accident in which the insurer's policyholder is also involved. You get hit by a car for no fault of yourself. Can you talk to that other insurance company here in Hawaii? You're going to say, I'm sorry, you're not our insured. No, but I'm involved in an incident with your policyholder. You need to write me back, right? By the way, let's talk about writing. Write everything. Stop talking. I don't want to give you advice, but I'm telling you, don't do that because they deny it. You're being recorded. You get emotional. They can play that play button. See, this is the crazy lady we were trying to deal with. We were trying to tell you about, Your Honor. So, it's just always in writing. Always in writing. And if you're on the Google groups, I'm sorry, I can't think of anything worse you can be doing than giving your personal opinion about people, adjusters, things like that on one of those things where you're all sharing it. It may come back to haunt you. It may come back to haunt you. All right, the responses shall be more than, and this is about the writing, shall be more than an acknowledgement that such person's communication has been received and shall adequately address the concerns stated in the communication. Mr. Agent Producer, I want that certified copy. I'm giving you 14 working days. I want the certified copy, and it better be right. Failing to adapt and implement reasonable standards for the prompt investigation of claims arising under insurance policies. We actually had one that really didn't have a written policy of how they handle claims. We found that out. I said, how long have you been selling insurance? 52 years. You don't have a program for your claims? Refuses to pay claims without conducting a reasonable investigation based upon all available information. All available information, not their preferred information. Failing to affirm or deny coverages for claims within a reasonable time after proof of loss statements have been completed. This is the Hawaii Public Adjuster proof of loss. This is your story. We put it all in here. We find it from all different sources. We go to the county, state, satellite sites. We put it all together. So it's not just an estimate. I know you get caught up in the estimates, but we make sure that when we're done, we expect every one of these to go to trial. Almost never do. Because when they see this versus just an estimate, they know this is trouble for them. They know they've gotten some tolling letters. They just want us to go away. How do you make me go away? Write a check. Yeah. Okay. All right. What's reasonable? We call it 30 days. Failing to offer payment within 30 days of affirmation of liability. What's affirmation of liability? Meaning they owe you. If the amount of the claim has been determined and is not in dispute. So if this is funny. If the amount of the claim has been determined, all right, it's face value, the whole policy plus your other coverages, right? I don't know how you can't get to that. And it's not in dispute. Who's disputing it? You guys disputing it? So we write these, each one. On this date we gave you this, on this date you didn't do that. You're at your 37th day. Hurry up, we're done. Failing to provide insured, you, or when applicable, the insured's beneficiary, your children, or mom and dad, with a reasonable written explanation for any delay on every claim remaining unresolved for 30 calendar days from the day it was reported. Every 30 days they are to be writing you. Writing you. Every 30 days. That's the law. It may not be the law in London, but they're about to find out what it is here in Hawaii. All right. Compelling insurers to institute litigation to recover amounts due under an insurance policy by offering substantially less than the amounts ultimately recovered in actions brought by the insureds. They underpay you. This is one of the biggest things we always pull out. Right? Okay, so if you're going to make us sue you, we want to make sure you don't say, oh, I didn't know I couldn't pay them, or I could pay them low. I didn't know that was illegal. So we make sure that we document these things that when they do see them, look, folks, we don't like going to court. We don't, but sometimes we have to. And and I'll tell you this, we've never lost. Not once. I've never lost an appraisal. I've never lost in court. Not once. Doesn't mean I take everything to court, but I'll tell you that when we do, we know we're right. But again, it's less than 5% of the time. But when we do, we're serious about it. Attempting to settle claims for less than the amount of which a reasonable, and there's another one about payment, prompt payments. Attempting to settle a claim for less than the amount which a reasonable person would believe the person was entitled by reference by written or printed advertising material company or made part of an application. Two types of files we have here. You have your claim file, right, which y'all are creating, and they're creating theirs, which you have privy to. And there's the other file, the underwriter's file. The stuff they have about you, how much they said they were going to insure it for, an application signed by you. We have people right now that we've gotten files for, they don't even signed an application. In this state, they want you to sign the application. How much insurance do you want? We've had another one where the guy said, hey, I want to increase mine, this is back in April, I'm going to increase my insurance by about $200,000. Well, why don't you just wait till your renewal is up? He says, no, I want to do it now. Then the person took off on vacation. Then the volcano went off. Then the person came back from vacation, and I'm talking about the agent. Well, guess who owes the $200,000 now? That agent's going to owe it, guarantee you, under his errors and omissions. He took away something in writing. The guy said, I want $200,000 more, and he ignored him. That's in the underwriter's file. They said it didn't exist. They gave us a copy of it. He gave us a copy of what he sent. And then they're corresponding in emails. I said, well, are you denying that you don't have this in your underwriter's file? Okay. And I think I was on this one. Okay, attempting to settle claims on the basis of an application which was altered without notice, knowledge, or consent of an insured. We have another one. We have one that came in that the guy did pay for it, did have the even a form number on it, because when you get the policy in, right, D-I-C-E. Well, in the next section, it lists all the forms that make up that policy. That's how it ties them all together. There's a list of those forms, those endorsements. The ICE is always the saving grace. One of the first things we do, we start checking things off. Did they give us everything? Nope. Almost always there's a form missing. I say, gee, I wonder what that form says. So we do that. They send it to us. The form's missing. What it is, it's an increase in coverage form, and it's missing for $200 grand. Believe that? Guys, we get I said, give me the back of that check. You got that? Yep, sure enough. He's got a check tied to that, tied to that. They didn't give it to us. Bad faith, right? You get this in front of a jury, you could get triple damages. Especially a HELO jury. Making the claims, payments to insureds or benefits not accompanying a statement setting forth the coverage under which the payment's being made. They send you a check, you don't know what goes for it, that's against the law. A summary statement of loss, that's what that's called. Tells you everything they're paying for. If they just send you a check, I tell you what, there's another one. They send you a check, and on the back of it, it says stuff, be careful what you're about to sign. The check must be accompanied by the statement. It says what it's all paying for, not your insurance. This, your loss of use for this, and this amount for that, this amount for that. It's the statement. You should get that with every check, not just the first one. And making known to uninsured or claimants of policy appealing from arbitration. What are arbitrations? We have appraisals on your policies, right? If you agree, and I'm the insurance company, and I don't agree, and we say, well, wait a minute, how are we going to solve this? Before you can sue, you have to agree if it's unless they've done some bad faith. You have to go to an appraisal. You pick somebody, they pick somebody, and then you two pick a neutral. Hawaii Public Adjusters uses 6 retired judges over here that are well versed in this stuff. We don't want somebody, who do they pick? They pick one of their lawyers, or they'll pick one of their contractors, better yet, they keep trying that. We still shoot them down. Nope, not acceptable, they're biased. Delaying the investigation or payment of claims by requiring an insured claimant or the physician of either to submit a preliminary claim report and then returning subsequent submissions forms, in other words, to start forming you to death. Right? Oh, we got to do this form. Can you fill this out? How old was your house? Hey, look, it's my claim. Here's my claim. Pay attention. Tell me where your exclusion applies to this. All that other stuff goes away. All that other stuff goes away. I'm not going to sit here and play this paper game with you. Proof of loss. Failing to promptly settle claims where liability has become reasonably clear. Under one portion of the policy, coverage to influence settlements under the other portions of the policy. I'm going to pay for your dwelling, or I'm going to pay for this, but I'm not going to pay for that. No, I made a claim for all that. Well, we're not sure yet. No, hold on. What do you mean you're not going to pay for my loss? Well, until you settle your dwelling with us, we're not going to pay your loss of use. Bam, bad faith, right there. You can't use one against the other in your coverages. That's against the law, that's bad faith. P, failing to promptly provide a reasonable explanation of the basis of the insurance policy, of the basis in the insurance policy in relation to the facts or applicable law for denial of a claim or for the offer of a compromise settlement. All 3 of those would be considered bad faith. Q, some of these checks that have come out here, Universal sent out some checks, was telling said to us that we would put in our trust account, but I said, whoa, nobody's signing this. On the back of it, he said, well, this is just the preliminary checks, right? Preliminary checks. But it has this printed on the back of it. Immediately sent that back over to them in a letter, or Lisa was handling this one. She sent it back to me and said, you got 3 choices here. Tell us to write it off, scratch it, or you guys print us some more checks without any of that on it, right? Or defend yourself. No. Well, scratch all that off. We didn't mean it was a total accident. It's pre-printed on a check. How's that an accident? It's printed on their checks. Came with 7 checks. Every one of them is a final. Just be aware of that when you write on the back of those checks. Get the authority. say I'm crossing this off, this is against Hawaii law, do you go against me or not? Okay. And I'm done. Questions? Yes, ma'am.
Okay, you guys are handling my claim.
Okay.
And I,
And you are?
Kathy Urso.
You're Urso? You're Urso, yeah.
Okay, so the checks that came in, they sent a bunch of checks that were just, they were gonna send them to me, they had called me, oh, what's your new address? And I said, no, I'm having you guys, you know, and they said, oh, okay. Well, then they sent you guys all these checks. And there's like 10 checks, and it's like 1,000, 2,000,
Let me explain why that happens. Do you know why?
And my son, who was on the house also, was like, do not cash these checks. Do not, I mean, well, Lisa was explaining that they come from different.
They come from different accounts because, little story, late 1700s, people are shipping stuff around the world more, right? Columbus discovered America, all that. Lloyd's of London was a tea house, sit out by the harbor, that you would go down there, and all these businessmen would sit there and read these rate sheets and things, and you'd say, I want to ship tea to Boston. This is true, tea to Boston. So they ship this, they go to do this, and so underneath, they say, well, here's my fine captain, and here is, oh, shipworthy ship, and here's this, and here's what the inventory is going to be, and down to here, and here's our sailing dates, and it's not storm. So here's this write-up. Somebody says, I'll take 10% of that, and they underwrite that risk. That's where the word underwriting comes from. The next person says, oh, hey, mate, I'll take 15% of that, and they put 15%. So they get all the way to 100%, and those are the insurers. Those are the group of people that insured, right? So that's the insurer of like last resort, Lloyd's. You know, they just sit over there doing these things. But there's these big groups, you know, all kinds of them. So when there's a loss, well, that guy got to write 10% of all of those things, and that one's got to write. That's just how it works. Now, some of them, I've got some Lloyd's that is just one. The Lloyd's working out of the Great Lakes, is it? Great Lakes. They got one person seems to be doing a lot of underwriting for that in this area here, but it'll get like that. Just understand it's a method of how they put the risk out, they insured, they lost, they got it right, but they write to the percentage of what they took the risk at. So each one, and so a TPA, a third-party administrator like ARM, have you heard of them? They're now Lloyd's TPA, and they say, well, wait, you know, we're a TPA, we're not adjusters. I said, in this state, you're an adjuster. You're deciding who's getting paid what, and you're not licensed over here. So work with me on this one. Look, we'll work with you. I'm saying you're not, you're adjusting from afar, but we're a TPA. You're an adjuster in this state. I mean, you're an adjuster in this state's eyes. You're not in this state. You're acting as if you're somehow above adjusters. You're an adjuster. They call yourself the blue people. I don't care. You're still an adjuster. Any other questions, ma'am?
When the claims adjuster has to submit paperwork, and we said that, and there's reasonable investigation, what is considered and what is involved in a reasonable investigation?
A reasonable investigation. Well, it's not an unreasonable investigation. So reasonable, and it's by all information too, right? That's an investigation. No, we got another estimate. I don't care. You get 5 more. Just pay it within 14 days, right? Because that's your claim. Show me the exclusion where that doesn't cover it. So the reasonable becomes 14 days. Right? It's really, because it could be the 30 day on the final payment. So that's reasonable. 2 months? That ain't reasonable. You write them a letter, they owe you it back. I hate having people do that because that starts to get out there for you. That's what we do. And again, people ask, and I don't mind saying it, we're between 10 and 15% of the entire claim. We do everything for you.
Can I also use reasonable also?
Yes, ma'am.
As an attorney, the word reasonable has a legal connotation. I don't want to say definition, but oftentimes you look at the reasonable person under similar circumstances. So in this case, if it were to go to maybe litigation, a court would say, well, what is a reasonable insurer or a reasonable agent or a reasonable broker would do under the same circumstances? And then they might look to the standard of practice in the industry. Does my other colleague attorney agree with that definition? So that's how you come to reasonable. Yeah, it's not what they think is reasonable. It's an objective standard, okay? Plus, you have to comply with the law too, like Robert was saying. You can't, right? And that's the first. That's a basic.
Cindy?
I have one little question for you. The adjustment.
Oh,
Ever seen any problems with somebody who was overinsured? In 2008, I felt their appraisal of my place was much higher than it was, and I meant to complain, but never did.
well, you know, you have to, you know, parts of the policy, you have to have an insurable interest. You did, and you have to be within. It says, you know, within 80%. Doesn't say anything about the other way. Now, I'll tell you, you know, right now, Sandy's a good example. She gave a great one this morning. It stuck with me. Most people are underinsured, but not necessarily because of themselves, because you don't know about this stuff. That insurance carrier, we have found, has sent people out and has priced houses. I don't care what the price of the house is. I care about the price to rebuild that house to current standards. Somebody asked me, well, what is that? I said, well, ordinance and law is a coverage. O&L is one of the separate coverages that Sandy was talking about earlier. What's O&L? Solar panels are one. State did that in 2004. You got to have solar panels, hot water, right? You may not have them now, but if you go build it back, they owe you that solar panel built back. So it's an incurred expense. Look for that word incurred. Incurred means you got to do something versus we will cover, which doesn't say incurred, means it's covered. So back in this file, I have back to those numbers. I've had people that are like, well, that is kind of high. So people can ask us after we're done with the claim, what should I be insured for? And we say, here's your ranges because of your current conditions, and the state allows me to do that. We're claims experts, right? Well, you're going to get another claim, we want to make sure you're in the right range. Other structures, we're getting covered. Other structures, additional 10%, landscaping, additional 5%, debris removal, 5%, where the word incurred does not exist. Here's somebody that had a $358,000 dwelling loss, other structures of $85,000, $53,000, $27,000, $71,000, total loss of $453,000 against what their policy cover was $300,000. However, we found them another $60,000 hidden within the policy. Okay, so we got them 20% more. And some little quick thing here, our policies, our POLs come out with this down here. That's how much they self-insured for. You got your insurance company insuring you, and then everything else, what you insured it for, you yourself, right? You yourself. Why is that important? You want to get this to your tax person, right? Because in catastrophic loss conditions, IRS and the state have these abilities to offset your income by how much you self-insured. So on your policy, there's a formula you got to work. I'm not a tax expert. You're going to want to know what that number is, because this person now has got $113,000 with the ability to offset, right? Again, go to your tax people on this, but they ask us for these numbers, and so we just provide it. So there's value in that.